Hello and a very warm welcome. This guide is brought to you by the fantastic team at My Tax Accountant. We're going to tackle one of the biggest questions for foster carers all over the UK. Do you really need to pay tax on your fostering income? Well, let's dive right in and find out. You know, fostering is such an incredible, life-changing thing to do. But let's be real for a moment. The money side of things, especially the word tax, can bring on a whole lot of stress. The absolute last thing you need is to be worrying about a surprise bill from HMRC dropping on your doormat.
So, let me put your mind at ease right from the get-go. Here's the brilliant news. Because of a special tax scheme just for foster carers, the huge majority of you will find that you don't have to pay a single penny in tax on your fostering payments. So how on earth does that work? Let's break it down.
The magic key to all of this is something called Qualifying Care Relief, or QCR as we'll call it. This is the foundation of tax for foster carers in the UK, and trust me, it's designed to be incredibly generous. So, what is it really? Well, you can think of QCR as HMRC's way of saying, we see the vital work you're doing, and we want to make things easier. It's a super simplified tax system that gives you a really high tax-free allowance, letting you focus on what truly matters, caring for children, not on wrestling with complicated tax forms. QCR is made up of two fantastic parts that work together to help you. First, you get a big, fixed, tax-free allowance simply for being a fostering household. It's that simple. And then on top of that, you get another tax-free amount for every single week a child is in your care. Let's take a look at the actual numbers for this year. Okay, so for the 2025 to 2026 tax year, that fixed household allowance is a massive £19,690. That's your starting point, and it's completely tax-free whether you foster for just 1 week or for the entire year. It's a flat amount for your home. Now you add to that £19,690. For the 2025/26 tax year, you get an extra £415 per week for a child under the age of 11, and that figure goes up to £495 per week for a child who's 11 or older. And remember, that's for each child for every week they're with you. It adds up fast. And here's a little pro tip, because this is where a lot of people get confused. When we talk about your fostering income, QCR covers the whole shebang. We're talking about your standard allowance, any extra fees or rewards, payments for mileage, holiday pay, all of it. It all gets bundled together and covered by this one simple relief scheme. Right, so we've got the two parts, the household amount and the weekly child amount. But what does this actually look like in a real-world scenario? Let's put these numbers into action and calculate a proper tax-free total. This is where you'll see just how powerful this QCR thing really is. Okay, let's take a look at Laura's situation, which is a great example from gov.uk. First, she automatically gets her fixed household allowance of £19,690. Simple. Then, she cares for a 14-year-old for the whole year, so that's 52 weeks times the higher rate of £495, which adds another £25,740 to her tax-free pot. She also looks after an 8-year-old for a shorter period, just 10 weeks. That's 10 weeks times £415, adding another £4,150. And here's the crucial bit. When you add all that up, Laura's total tax-free threshold for the year is a whopping £49,580. Just think about that. She could get fostering payments all the way up to that amount and not owe a single penny in income tax. It's a huge buffer.
So the obvious question is, what if your fostering income goes above that amount? Well, it's actually pretty simple. You only need to think about tax on the bit that's over your threshold. Honestly, for most carers, this doesn't happen. And even if it does, your standard personal tax allowance often covers it anyway.
Okay, so if most foster carers don't actually pay tax, what's the deal with tax returns and national insurance? I know, this is the part where things can get a bit confusing, so let's make the admin side of things crystal clear.
This is, without a doubt, the #1 question we hear. And it's a perfectly logical one, isn't it? If I'm not going to owe any tax, why on earth do I have to bother with all the paperwork of a tax return?
And the answer is a very clear and simple yes. You absolutely 100% have to file a tax return. The reason is that for tax purposes, HMRC classes all foster carers as self-employed. And being self-employed means you have a legal duty to declare your income every year, even if that income turns out to be completely tax-free.
So, to make sure you stay on the right side of things, let's get these dates in your diary. The tax year runs from April 6th to April 5th the next year. If you still like to file by paper, your deadline is October 31st. But for most of us who do it online, the big one to remember is January 31st.
That's the deadline for getting your return in and for paying any tax you might happen to owe.
Now let's talk about national insurance. It's so easy to overlook this, but it is absolutely vital for your future. Think of these as the payments you make to build up your right to certain state benefits, and the big one, of course, is your state pension.
As a self-employed foster carer, there are two types to be aware of. Class 2 is a small, flat weekly payment that you only have to make if your profits from fostering go over a certain limit. Then there's Class 4, which is a percentage you pay on profits above a much higher limit. The reality is, because of QCR, most foster carers will have zero profit, so you won't be required to pay either.
But hang on, stay with me, because this next point is really important and might surprise you. Even if your profits are zero and you don't have to pay national insurance, you can choose to pay those Class 2 contributions voluntarily. It's a small weekly amount, but it is genuinely one of the cheapest and best ways to make sure you don't get any gaps in your national insurance record. It's all about protecting your future state pension.
Okay, we've nailed down the tax rules. Now, let's just quickly run through some practical tips to make managing the money side of fostering as painless as possible. Getting into good habits now can save you a world of stress when it's time to do your tax return.
Right. The golden rule is just so simple. Keep good records. It's not complicated. You just need to jot down the arrival and departure dates for every child. Make a note of their age so you use the right weekly rate, and keep a running total of the number of weeks you cared for them. Having this info to hand makes filling out your tax return an absolute breeze.
Whew, we have covered a lot of ground. We've gone from how qualifying care relief works all the way to why filing a tax return and thinking about national insurance is so important. Let's just pull all that together into a few final key takeaways.
So, to recap the absolute must-knows. Number 1. Thanks to qualifying care relief, you will probably pay zero tax. Number 2, for the 2025/26 tax year, your tax-free amount starts with that big £19,690 household allowance. Number 3, you must register as self-employed and file a tax return every year. 4, good, accurate record keeping is your best friend. And finally, number 5, please seriously consider making those voluntary national insurance contributions to look after your future.
Look, even with this special system, we know that tax can feel daunting, but you absolutely do not have to figure it all out by yourself. If you want that peace of mind knowing that everything is being handled correctly, then please get in touch with the specialists at My Tax Accountant. You can reach them directly on WhatsApp or give them a call on 07854 255 375, or if you'd prefer, just drop them an email at info@mytaxaccountant.co.uk. And for more super clear advice just like this, make sure you hit subscribe on their YouTube channel. Thanks so much for joining me.